Use a phrase that I've said a couple times today, and that is that this is another lawmaker who has been with us since the beginning. Among many things, this past September, Congressman Warren Davidson of Ohio introduced the Evaluating DeFi Opportunities Act, which would require that the SEC, CFTC, and Secretary of the Treasury jointly produce a study on decentralized finance. He gets it, and he's fighting for it. Quoting the congressman, "Decentralized finance is essential to the future of capital markets, and we need to guarantee that data-driven financial regulations could be implemented by the federal government without interfering with the development of digital markets or jeopardizing the user privacy that DeFi provides." He is renowned for his landmark legislation entitled the Keep Your Coins Act, which is designed to preserve Americans' rights to privacy in transacting with crypto assets. Mr. Davidson has said repeatedly that it's vital we preserve the attributes of cash transactions by protecting the permissionless nature of cash. He is a fighter. He is beloved in his home state of Ohio and on the Financial Services Committee. We are grateful he is with us here today. And joining the congressman on stage is another proud son of Ohio, Seth Hertlein of Ledger. Congressman Davidson and Seth, please join us.
All right. Well, thanks for sticking through to afternoon on day two. Before we jump in here, I want to just take a moment to extend a very hearty and heartfelt thank you to Congressman Davidson for so much that he's done for this industry over the years. You heard just a bit of it from Dave a moment ago, but in the early days, before it was cool in Congress to be associated with crypto, Congressman Davidson was there so many times. He jumped in hearings to correct the record of some misstatement that one of his colleagues made. And so for that, we all owe him a debt of gratitude. So can I get a quick round of applause to show our appreciation? All right, thank you. Let's jump into it. So I want to start with a question that's sort of out of the headlines. As an OG Bitcoiner, what are your thoughts on the Bitcoin strategic reserve idea? Obviously, number go up would be very good for a lot of the people in this room, but it also kind of feels like a betrayal of the grand purpose of Bitcoin to separate money from state. What do you think about that?
Yeah, that's exactly when I read the Bitcoin Standard, and a lot of you've read that book. I think it's great. If you haven't, it's really one of the better reads I've had, and I read it twice. And both years that I read it, I said this is definitely one of the best books I read this year. And the idea that Bitcoin can be a stable store of value, I think, is great, but it's been a rocket ship in terms of appreciation. And so, you hear mixed arguments for why you should have Bitcoin as a strategic reserve and as a government asset. And, I got to say, I'm conflicted on it for the exact same reasons that you are, whether the U.S. should hold it or not. What I do know is the statement, fix the money, fix the world, is accurate. And I think a lot of us have believed for a long time is decoupling money from state is the right way to do it. And if the money is going to be linked to the state, the idea that you have a stable store of value, historically that meant a gold standard. And one of the best websites out there that doesn't really say, doesn't answer the question it asks it is, WTF happened in 1971.com. And you can look, you started debasing the currency. And so you have to have some sort of limiting factor for the money supply. And when, Milton Friedman got his Nobel Prize because he talked about, inflation's always and everywhere a monetary phenomenon. So when you increase the supply of money, you inherently will produce inflation. First, it originally meant inflating the money supply. But what you see after that is asset price inflation. We've certainly seen that in spades. And then you eventually see it flow through the market to consumer price inflation. And if you don't do something about that, inflation essentially serves as a theft, right? And so I think the concept behind a Bitcoin standard is to get at that problem. I'm not sure a strategic reserve is the right thing. I do think it'd be particularly dumb of the United States to keep selling the Bitcoin that they have seized, since it's been appreciating, it turns out to be, maybe not as bad a decision as buying pizza with it, but it is not a good one.
Yeah, so perhaps we could sort of back into a strategic reserve just by holding what we get otherwise. And I love WTF happened in 1971. I give a talk every year at the Ohio State University, and I always highlight that website and some of the statistics for the students there. Of course, one of the most important ways that Satoshi sought to separate money from state was by empowering individuals to hold their own value again through self-custody. To my knowledge, you were the first member of Congress to understand self-custody. You were certainly the first to stick your neck out to defend it. And many folks here in this room may not know that you've actually hosted workshops for members of Congress to teach them how to set up their own wallets. I just want to check in on progress. How goes the educating your fellow members about self-custody, and what can we in the industry do to help?
Yeah, I think we've had a couple sessions on member education. Maybe the most successful was we had about 15 members that came, and we had Pierre Rochard and Michael Bitstein come out and do some member education. For people that stayed the whole time, they went from, what's the difference between proof of work and proof of stake, i.e. the basic difference between Ethereum and Bitcoin and some of the other derivatives off of those chains. And then what does it mean to run a node? And then what does it mean to have self-custody? And I think it was important to understand, because that came right after what I call the Portman ambush. Rob Portman led this fix in the infrastructure bill that decided that they were going to tax Bitcoin or crypto transactions. And it led to things that are completely unworkable. Treasury came out and said, no, that's not what it means. Well, the plain reading of the text would make it impossible to comply with. And just as an example, you would actually have to know the name, address, social security number, and everything on a form called 1050I for any transaction valued at $25,000 or more. So it really makes it impossible to really move value and run a node if you really take the literal definition of that language. So that was why it was important. And since then, you've seen some correction. But I do think we orange-pilled a couple members there.
Yeah, I love that. You're like the Michael Saylor of Congress.
No, not even in the same league, but yeah.
Well, if you weren't already recognized as the champion of self-custody in Congress, you certainly were after your introduction of the Keep Your Coins Act in the wake of the Canadian trucker scandal. Can you briefly describe the Keep Your Coins Act for the audience and explain why everyone here should support it?
Yeah, so if you read the Bitcoin white paper or reread it or just look at the abstract, the whole point of it is to facilitate a permissionless peer-to-peer transaction. And for a lot of people that are big government folks, they started out working to kill crypto altogether, and that was the whole point of Elizabeth Warren's crypto army. We didn't get rid of her. Thankfully, John Deaton made a good effort at it. But we did get rid of Sherrod Brown, who's the Senate banking chairman. And just today, thank you for that.
Yeah, that deserves an applause.
One of our senators, and we've got a serious upgrade with Bernie Moreno, who's going to be great on this industry. He's been an investor in the industry, early supporter for me, and totally gets everything about it. So huge upgrade in the Senate. And just today, we blocked Sherrod Brown's effort to try to get Carolyn Crenshaw an additional term in the SEC as a commissioner. So the anti-crypto people tried to keep it account-based, and that's kind of been their check-down position. If we can't ban it, then we at least want to make it account-based. And anybody that really opposes self-custody, what they're telling you is they don't trust you with your own money. They want to have your wealth in the hands of someone that they can control. And that's what an account-based system is. So if you look at Operation Choke Point, Mark Andreessen just did Joe Rogan's podcast and made that famous. We had all kinds of people saying, aren't you guys going to do something about that? And you're like, well, here's a long list of hearings. C-SPAN doesn't have quite the same reach as Joe Rogan's podcast. But we have been working at it. We've been trying to stop it. But obviously the current administration's been the one doing it. So they haven't been really cooperative with some of our legislation. But the really anti-cancel policy is self-custody. So whether it's worrying about bankers overreaching and debanking you, or if it's fraudsters like FTX turned out to be a problem. If you had self-custody, you didn't have any issues. The same if you started out with a BlockFi account. I loved their initial model, and somewhere they went off the rails, had some problems. But if you had it in hard storage, you didn't lose anything. People that had it in other forms lost something. They were able to recover more than I thought a lot of people did. But that's the big thing. And at the end of the day, how do you have decentralized finance, DeFi, without the decentralized part, right? How do you get rid of intermediaries by mandating a system that requires intermediaries? And that's what an account-based system is. And frankly, digital IDs at the core of it. And lastly, there's in name only is it saying, oh, well, we've got a whitelisted wallet, which is, well, we're going to spy on the wallet. And we're going to turn that into a surveillance tool. So we really need a truly permissionless system. And I think that's worth fighting for.
Yeah, absolutely. And after FTX, one of the things that I said over and over and over again was that self-custody is itself a very powerful form of consumer protection for the very simple fact that no one that was self-custodying their own assets lost those assets on FTX. But so you were successful in getting the Keep Your Coins Act included in the original draft of FIT 21. Unfortunately, a hostile Treasury was also successful in watering that down. How has the election changed your outlook for Keep Your Coins Act in the next Congress?
Yeah, we'll say we got self-custody in FIT 21. We didn't get the Keep Your Coins Act. So it is very watered down. So it's technically, it does protect self-custody, but it's kind of weak. And frankly, they stripped it out of the stablecoin bill that was in the House. And for that reason, I'm very relieved that we're not moving forward with the stablecoin bill that moved through our committee this last Congress. And I'm hopeful that we can, have a strong protection for self-custody. And look, we got the vote on the FIT 21 bill this spring in May. And one of the things I said is this is an issue that right now anyway, in Congress, unites Republicans and divides Democrats. And that showed up. Now, I didn't realize that we would get 71 votes when we put it on the floor, but that's a pretty good marker. We got Nancy Pelosi, Hakeem Jeffries wasn't there. They split. But 71, I think, was a real signal for Democrats, like, oh, we might be messing up here. And that's what we have to do. We have to really take this off of the Elizabeth Warren warpath and get people to unite behind it. Because in the industry, as you all know, a lot of the people in this sector would consider themselves left of center on all kinds of other political views, but they're really sick of the Elizabeth Warren-dominated Senate finance world, and they've really been the core office in the Senate when they go through confirmations that's driven how the administration, the Biden administration, populated their financial services appointees. So getting them out of the way was necessary to get people that are going to be strong in it. Now, look, I'm happy with the Trump administration on all kinds of policy issues, but for some of the people that I know, they're disappointed on a lot of other policy issues, but they're at least excited about this because you're going to finally get legal clarity in financial services. I think David Sachs creating a new position there is a clear signal that the administration doesn't just want to do rulemaking and executive action. They really want a law.
Yeah, and I think that's absolutely right. And I think whatever your politics on other issues, I think everyone in this room will be very excited about the end of Operation Choke Point. So there's certainly room for compromise. Shifting gears a little bit here, you often talk about, I want to make sure I get this right, restoring a government small enough to fit within the Constitution. And whenever I hear you say that, I immediately think about how the Patriot Act and the Bank Secrecy Act has swallowed the Fourth Amendment, and in so doing harming all Americans with very little success to show for it. So my question is, does this political moment, does the dynamic that we have going into the next Congress finally present an opportunity to rein in the surveillance state?
Yeah, I'm very hopeful of that, and I think one of the clear signals that the Trump administration is taking this seriously is they selected Tulsi Gabbard to lead as Director of National Intelligence. So that is the top intelligence official in the country, and she's been, when she was in the House of Representatives, She was a Democrat at that time. I worked with her on privacy protecting language. But, you know, this is one of the issues that you talk about a political horseshoe. We passed a bill called the Fourth Amendment's Not for Sale this last year. We had 123 Republicans and 96 Democrats. I mean, that's hard to even pass a rule that gets a bill to the floor when you don't have that kind of, you don't really have a unified Republican front. We barely had a majority of Republicans, and we had almost half of the Democrats. And what we did is we made it, well, the Senate didn't take it up. What our bill would do if it became law, it did pass the House. It would stop the government from buying data that they would otherwise have to get a warrant or subpoena for. And when you talk about, you know, not just buying it, collecting it in other means, aside from the Patriot Act and FISA, if you look at the Bank Secrecy Act, the kind of data that's collected and held by FinCEN, you have 14,000 federal agents that in 2023, over 3 million warrantless searches were made of that data. So we really need to do a good job of protecting privacy. And I think the best way to do that is to not collect the data in the first place. Because once you collect it and say, oh no, we're going to keep it safe under a digital ID, it's just it's like the Lord of the Rings, one ring to rule them all. They're going to abuse the power. So let's not give it to them. And I think that's why I'm excited about some of the things in the space. Bitcoin's architecture is unique. It's not like a centralized database where there's some network administrator with superpowers and everyone else gets some lower level of credential or permissions. It is completely decentralized in how the architecture works. It assumes we don't trust one another. And if you couple that with things that like Zcash are doing with zero-knowledge proofs to really have truly private transactions, I'm really excited about it. And right now, on some of the exchanges, you know, my colleagues are saying wash trades are really just to try to launder money and evade taxes and do illicit finance. But the reality is, if you're in self-custody mode, you might want to go through a wash trade just to conceal how much of a certain, you know, let's say Bitcoin you have on your cold card. You might not want to say how much. You just want to pay for a new car or something, which you can pay for pretty easily with 1 Bitcoin now.
That's right. That's right. So you know, I agree with you on that point about the, you know, so the best prevention is just not collecting the information in the first place. You know, do you think that that's something that can be accomplished administratively or through the executive, or does it require an act of Congress?
I mean, some of it will definitely take legislative action by Congress, and we should look for more legislation. And that was part of what my SEC Reorganization Act was about, was not just firing Gary Gensler, while that would have been great to do and could have saved us a lot of heartache. You know, I'm glad he's going to be leaving soon. But, you know, Gensler highlighted not just that he was a problem, but the structure is, if you've got a good chairman, that's great. It's like a benevolent dictator, right? But if you've got, you know, an ideal world, you would want a commission that solves the 80-20 issues, right? But if it's 50-50, you should go to Congress, you should legislate it, and then you can pass something that's enduring, because what the markets are sick of is, and what wrecks capital formation in any stack, is the uncertainty. It's like, oh, well, this administration is going to be good, but the next one, I don't know. And you see that like on energy policy. You see, you know, investments that take 10, 15 years to recoup the capital. People don't make the investment because they know they don't really have a 10-year runway. They've got, you know, 3 out of the 4 years of the next administration where they feel like, well, I probably got a little certainty for now. And it really changes the investment. And, you know, I'd really like to see more congressional action on a lot of fronts. And thankfully, the courts are pushing us that way, because they ended Chevron deference, which was the idea that the regulators are really the final authority on what the intent was. They're like, why would that be? Why wouldn't it be with Congress, where we drafted the law, that we knew like what we intended when we drafted it? And so that's a restoration of congressional authority. Hopefully we'll make use of it.
Yeah, well, I think we have time for one last question. Maybe it's the most important one to the folks in this room, but with French Hill's elevation to chair of the full Financial Services Committee, the chairmanship of the Digital Assets Subcommittee, of which you are currently the vice chair, is now open. If you were to get the gavel, what would a chairmanship of the digital assets subcommittee look like under Warren Davidson?
Well, look, I'm excited that French is our chairman. I'm glad I wasn't on the steering committee. It would have been very hard to choose between French Hill, Andy Barr, and Bill Huizinga. I think they're all very capable. I love serving with all of them. I really think even between the four of us, there's not a lot of things that we would do differently. We all have different styles. It's kind of been a semi-tradition for the new chairman to change a little bit about the committees of jurisdiction, maybe the title, maybe a little bit on jurisdiction. I don't know for sure what French Hill will do with some of those, but I think some part of this jurisdiction will stay in the committee. And if I were chosen to lead it, what I told him is, whatever I can do to serve you as chairman, I'm happy to do. Moderator. I don't really think there's any part of the jurisdiction we have that I don't enjoy. I mean, I love being chairman of housing and insurance. If I keep doing that, I'll be happy. If it's some other part of our committee, I would be happy. But if I were chairing, digital assets, talking with folks in the Senate, we need to change FIT a little bit to get some more momentum in it. And I think there's a legitimate concern, particularly in the Bitcoin world, where like, look, we've been clearly deemed not a security. So we kind of have a good path. We finally got Bitcoin ETFs. We don't need the CFTC to come in and start wrecking everything. On the other side, there are some fair concern about market manipulation, and you really maybe need the same kind of oversight over digital assets that you have over all the other commodities, corn, soybeans, gold, copper, whatever, in this space, and CFTC needs a little more horsepower to do that. That was the intent of FIT, but if you want to weigh in on that, FIT's going to be, probably the baseline product, but we'll modify off of that. And then I think, I always thought stablecoins would be the easy bill, but that broke down, and we got FIT easier than we got the stablecoin legislation. But I think stablecoin legislation makes a lot of sense, and I think we'll be able to get that. And then for me, to me, all those bills, FIT, the stablecoin legislation, all of it would protect self-custody, and I would just incorporate as the base text, the Keep Your Coins Act. So I think the last thing is, and we're going to introduce a bill this week that will give some authority to the Securities and Exchange Commission to start working on legislation to, what if you want to tokenize a security? So FIT kind of assumes that you want to launch a project that is not going to be deemed a security, and it provides rules of the road for things that are not securities. But the reality is the market for things that are tokenized that are in fact securities, and people are designing them to be securities, is probably going to be bigger than the tokenized not security market. And we don't really have rules of the road for that, and so we'd love to start studying how do we tokenize things and have them treated as securities, but tokenized securities.
Well, Congressman, there's loads more questions I'd love to ask you. I had one queued up about the Doge that I'd really love to get into, but alas, we're out of time. So everybody, the original Bitcoin champion in Congress, Congressman Warren Davidson.
Thanks a lot. Thank you all.